Welcome everyone to the Kendall Report. It is Thursday night, therefore the final report for the week. Make sure you subscribe, hit the like button, and also hit the notification bell so you'll know when I come live. Yeah, so today was an interesting day. We were in the live room, and I was talking about, if you recall, in the last several days that we should trade sideways, looking for a move back to maybe around the 37.97, 37.80 level. Well, we spiked out after the Amazon report came out and they crushed the market. We spiked out to 56, probably one of the best opportunities I've seen in the last several days, and was able to grab a position there. And some of you were still in the live room when we were spiking down. And I still believe that the pattern that is unfolding is going to stay sideways, not bullish, not bearish, but sideways. And it's possible that we've already seen the low overnight so far. We'll see. I know everybody gets bearish and people are talking about a short-term bottom. You might want to turn the clock back and remember 35.02. Okay, we're trading 38 handles. So yeah, the short-term bottom actually happened. And now what we're doing is consolidating the initial rally. And so, the patterns that I'm seeing here are interesting. I'll go through all this stuff in the technicals here in just a minute. I'm just looking at my notes here. Amazon just got absolutely cratered, to say the least. It was down 25% at one stage. I'll look at it later when we get into the show, but we're really just seeing the fangs are absolutely destroying this market. And one of the things that is continuing to happen, and it did again today, was the Russell. And we saw the 10-year implode under 4% back to 393. That was the number I'll show you here in a few minutes that was on the scale last night as far as the market grid goes. And we went there. I thought we would hold 399, just amazing amount of activity in the bond market. And you go from everybody hating them to loving them. And so we'll see what happens over the next several days. And of course, the title last night was GDP to surprise, and it did surprise. The earnings so far maybe are starting to turn a little more sour with some of these big companies. Maybe we're finally starting to see earnings implosion starting to happen. And once again, we just got a lot to consolidate here. We had 370 some earnings reports coming out. There was a barrage, especially after the close today, where we had Amazon, Intel, Apple, all of these major players are out there really moving the markets around to say the least. Before the opens, while I'm talking about earnings, we'll have Exxon, Chevron. The oils are probably going to lead a little bit. We'll see what kind of action we get out of here. But the tech is just going to continue to stay under pressure. Remember, we get PCE numbers today. And one of the things that's expected to come in 0.3. I want to just point out that yesterday's reports, GDP came in at 2.6, bit better on Q3. The deflator was 4.1. The previous deflator was at 9.0. So that thing is over half. And that story is on everybody's mind watching that deflator come in like they did. Claims were down a little bit, no big deal there. And durable goods were up 0.4. So in the end, of course, the administration, everybody's going, hey, look, the economy's just fine, no problem at all. And, there are problems, but as I pointed out, they're mostly in the housing right now, and we're not really seeing a lot of cracks in other areas like retail and other things that continue to do fairly well, even though Amazon's report was anything but good, and even the cloud was off, and their projections for the next quarter weren't very friendly either. I think that's what they got punished the most for. But the PCE numbers out tomorrow, if they come in better than 0.3, people are going to start talking about this inflation peak story will start to emerge, and maybe the algos will grab a hold of that and run with it. Just looking at my notes here, yeah, that pretty much covers all the basic stuff. Only thing I would say is don't be too fooled by some of this downside action, because, like I said, you got to remember 3502 was the low in this pattern. This is a retracement, and I'll go through these details, but a 50% retracement, 3735, and actually that's 0.382, 50%, 3684. And we still have a long position on. So we'll go through all the details here in a minute in the technicals. Let's go ahead and dig into the database. So database continues to improve. We had 919 buys, 154 sells, up to 37.81, just below 42. And a decent day tomorrow on Friday will actually potentially throw this over the 42 mark. The real question that I have is on the database, will we get traction on the intermediate database? And let me just show you, let's go over and just bring up the intermediate database, because it's Friday. This is when our weekly models run an update. We're at 17.49. We only have 2,792 symbols on, so there's still basically, for all practical purposes, 8 out of 10 symbols in our database on intermediate have no position, so we're not able to really get any traction. I actually don't expect much out of this. I don't think we're going to get much above this. Maybe we get a little traction, but I don't think so. I think this database on an intermediate, there's not going to be any intermediate trend emerging out of this pattern. And the whole pattern, as you'll see here in a minute, we go through the technicals, we're really just off of that 35 low. We traded almost 3,900. If you recall, the fib target 3 was 3906. We hit 3897, so close enough for government work. But all of this stuff, it's not enough to get traction on an intermediate basis. And I'll go through all those details. But the weekly, I don't see have any. Those of you who are institutional users and the retail folks using PX, PortfolioXpert, or Wavetech, you're not going to see a lot of new trades come out, I don't believe, on a weekly basis. It would be a big surprise based on what's going on in as far as the configuration of most of these stocks. All right, let's take a look at the S&P. And as I mentioned here, let me blow this up so you can see it. We still are trading above the 40-period moving average here. The 10-period moving average is still up at 0.55. That suggests that that value, which is right now 37.71, we're not likely to close under that. Yesterday, that value was 37.50, and the low yesterday was 37.56. And the value of the ppm at that was at point. Let me just get this number, was at 0.79. So while we're pulled back a little bit here, it does appear that this 10-period moving average is going to be solid support at 71. I told folks in the live room today, if you see anything that looks like 71, you need to probably buy it and for a bounce off of there. And we're likely to see, as we come into the end of the week, I'll bring up the weekly chart here in a minute, but we're likely to see this pattern just continue in this sideways range. And that's what I was saying on the opening comments, is that we're really in this sideways pattern, and the range is being boxed out by this bottom end of the 10-period moving average. Looking at the market grid right now, S1 is 37.98. That's for Friday. 37.74 is S2, and we've had a 37.90. So we could still trade down, make a new low, and trade down overnight here to the 37.70. That would be a S2 hit along with the 10-period moving average, and with this 0.55 value, that's going to look pretty good. Now, the only thing I will comment on is that the algos are starting to say that we're going to lose some momentum here. So I'm going to equate that, I'll show you the weekly chart in a minute, to a broader trading range here. I don't think we make a new low from this pattern. I don't think that's going to happen. In spite of all the crazy, terrible earnings that came out, I don't see that happening at the moment. But the algos are suggesting that we have several days of potential consolidation. And it makes sense if you think about it, is really what we're likely to get is before the Fed meeting. Is anyone going to make a big bet up or down? I doubt it. So we're coming into basically a sideways pattern. The range might get broader. I'll show you here. I'm going to go to the weekly chart next, just so you can see what the range expectations are. So we're really trading exactly how we should be trading. I know when it's interesting when you see these downside. I always one of the things that I do every day, I try to disconnect from the markets the best that I can, which means that the second the market closes, I stop watching. I try to disconnect and not have the feeling. So I see a lot of comments that come in on the channel. Everybody's still feeling what they saw today, and you're not oftentimes very objective coming into the news session. So I always try to, take and shake your head and try to clear out all the visions of what you watched and try to come into the next day with a clear head. But we're definitely looking at some sideways movement here. So let's go ahead and take a look at the weekly chart. So a couple things that I talked about, I remember on Sunday night, is that we could trade up to the 21-period moving average, 39.01. You may remember that number. The Fibonacci on the daily target I mentioned earlier, 39.06. We got to 38.9750 was the high print so far this week. On the downside, we're looking at the market grid here. 37.11 was S1. We only had a low of 37.36, so we didn't quite get there. We also have this rising 200-week moving average right through this pattern here. And the algos are still suggesting, and this is where, we won't call it a conflict, but this is where the bias should remain to the upside here as we move forward. But there is quite a bit of resistance right at the 10-period moving average, right now, 3809. That we're trading right at that number right now. And should, as we come into next week, we finish this week, we should see that downward momentum start to dissipate on the 10, and we're likely to get and trade between the 10 moving average and the 21. Let me get you some estimated values. As we come in, we're dropping about 40 handles. I'm just rounding this off, 40 handles. So on Sunday when we come in, the 10 period moving average is going to be around 37.70. And if we get this uptick, as the algos are projecting here, you can see my cursor, they're projecting a little bit of an improvement. In fact, what they're suggesting over the next couple of weeks is that the 10-week moving average is actually going to turn up. And if that happens, that means we have to stay above that for the moment. The 37.70 level is going to be the estimated mark that I would tell you to watch for. And the PPM2 is also projecting that we're going to flatten out, which tells us we could penetrate that level. And PPM2 is 3901, as I just mentioned, but it is still declining right now, about 15 handles per week. So that's going to be 38.85 roughly on the upside. So that will be key resistance as we come into next week. And like I said just a minute ago, I really don't see any big moves. Trading much under the 200 would be an extreme right now. 200 is 36.99, so we'll call it 37 even. That should be where this thing all starts to come together. On Sunday night, since we're coming in, Monday's going to be the final trading day of the month of October. So I'll go through the monthly, and we'll probably get into some quarterly charts and a little longer term viewpoint as we move into, the month of November. Next, we'll take a look at the NASDAQ. NASDAQ, same configuration. PPMs are, it's interesting because we're up at 0.38, and I think the market is going to try to get back above that 10 period moving average, 11,281. It seems like a tall order with Amazon and Apple, I think, has started to recover a little bit from what it was doing earlier. So I'm really looking at the NASDAQ to try to come back here as well. And maybe the markets will start to look forward and all the bad news will be over. We'll see. But the algos are suggesting we're going to lose some momentum on this upward trend that has started in the 10-week. We blew right through that. This is the daily, the 10 days. So we blew right through it. And what's trying to do is get back above here. And all of the algos are suggesting flattening out of all this stuff. And what I believe that means is a sideways range. Let's go over to the weekly so we can take a look there. Weekly, we look at the weekly pattern. So far, the low this week has been 10,921. Looking at S1 was 11,175, S2 10,970. So basically traded just below that. We're back at 11,167 right now. And so we're trading kind of in that range. The configuration here is also suggesting that we're going to lose some downward momentum here. And it's interesting that the 10-week moving average just crossed through the 200. So this is, to me, a sign that we might start to level out here. There's somewhat of a bubble bottom on a weekly chart here on the NASDAQ. And these are not the kind of configuration patterns that we have when there's going to be a full-out collapse. And but the key will be is to get back above the 211,720 is that mark, and that's a little ways away right now, about 600 handles. So there's definitely some work to be done. The 21-week moving average is still down, and there's still downtrends in here, but it looks like a bottoming pattern. And just looking at what the algos are telling us, that we should lose some downward momentum, which just tells us more of a sideways range. I'm going to broaden this out a little bit, and this is how the pattern on this is likely to unfold here, is that we'll basically, this is the 200. These moving averages are still down. We're looking at the market grid is going to stay fairly wide. I'm expecting it to kind of widen out like this. And then the market, I'm going to clear out some of this stuff so you can see it. What I expect is that market grid's going to come, going to do something like this, and the market's going to be in this sideways range. This is weekly, and that's what these indicators are suggesting, that at least all it's saying is not an uptrend, but it's saying that the downside momentum or the resistance levels are going to weaken a little bit from that standpoint. So what we're looking at is more likely more of a consolidation than anything else. I don't see the big impetus for downside here, especially with the positive configuration from the standpoint of the market grid here on a weekly. But like I said, we should kind of, everything should turn down. So there's definitely some potential downside. The NASDAQ has a little weaker look than the S&P does. And you can see, like today, I don't follow the Dow Jones, but the Dow Jones was up, and we also saw the Russell up. So the S&P was down 0.61. NASDAQ appropriately so, with Meta and everything else that was going on in the NAS, down 1.63. And you'll see we're going to go through the Russell here next. So the Russell is also seeing this same pattern, but this is what I've been talking about, is the Russell has been stronger, and I think it's due to probably at least a perceived high in the 10-year at the moment. All of a sudden, the interest rates have flipped around. Everybody wants to own these things, and there's some pretty good bid in the 10-year, as I'll show you next. But the weekly has already turned up. PPM 2 and 3 are already starting to signal that the downside resistance or downside pressure is dissipating. And there's a big pivot up here at around 1990 above the market. But we've got resistance here at the 40 period at 1874. But overall, this continues to act fairly well. Let's go to the daily. And I went top down here. See, the daily has a similar configuration where we're likely to come back. It's signaling that we're going to come back here and probably test the 2140. If you notice, all of the moving averages are almost at the same value. There's a cluster here, 1768, the 10, 1742, and 1762 is the 40. So we could trade back into here, but that's that same consolidation range, and that's what the algos are suggesting. At least, I'm going to say 3 days, maybe 4 in this consolidation range, and I suspect it will be at least get us into the Fed meeting coming in next week in the announcement. We'll take a look at the 10-year, and 10-year is interesting because I made a note to myself that there's a potential, and I've been telling you folks when a lot of times I'll mention these numbers and they will happen. The potential on the downside for the 10 years, 372 to 365, and we're trading 390. It's pretty amazing. The algos are suggesting that we're going to see more of a downtrend that says that this is the daily 10-day moving average is likely to roll over, and it's getting very interesting in this pattern. And the 40 period moving average is at 372, and we've got 3 fib projections to the downside right now. First one is 390, second 374, and then 364. So I kind of rounded these numbers to the downside, but it's also corresponding with the 40 period moving average. On the upside now, the 10 period moving average is going to be resistance at 408. And this is the daily chart here. Let's go over to the weekly so we can pick up on that trend. This is I think a pretty major event for the short term. I've been talking about that that the 10 period moving average, the weekly, is going to be a dominant average here. Well, it's at 365, and this is part of why I think we're going there. And not only that, the algos are projecting that the 10-week is going to roll over. This is where it starts to, on the intermediate, starts to get really crazy here for, I'm going to say this out loud, okay? I'll just come up on screen, because this is a crazy number. It's suggesting that we could see 340, 330. That would be 100 basis points. So what's going to cause that? Is that the Fed pivot? Is that what we're looking at? I think what's interesting going on here, as I mentioned it earlier, we got PCE coming out. I think we're starting to see gradually this story of peak inflation and all this start to play in. And if you just look at the stats that came out today, just on the GDP, the Fed's got to be super happy. They got a better GDP, and they got the deflator over half on the downside than it was on the last report on Q2. So there are things going on here. My job is to read these numbers and tell you where things are likely to go. It's hard to believe. I can't imagine a 330 10-year, but I was talking just the other day, and those are there's still a valid uptrend at the moment. And I was talking about the 5% level, and I was talking about that in the live room today, that there's still a probability of the Fed getting above 4.5 and 5. And just as we come in toward this last broadcast till Sunday night, I'll set this up a little better as we come into Sunday's market update. But this is the Fed is they're going to be probably doing their 75 basis points. That's going to put us at 375 to 4%. We're 3 to 3.25 right now on the Fed funds. That'll put us up basically at 4. And then everybody's going to be talking about the 25. We're ultimately probably going to get to around 4.25, 4.5. And that's where the questions will come in with yield curve and some other things. I think it's too early to try to call that until we see more of the configuration of what is happening here. But these are some crazy numbers. All of a sudden, there's a flip-flop, and I'm sure I'll get plenty of comments about me just talking about 5% on the 10-year. Now I'm talking about 330. We're really looking at the target of around 372, 365 was likely to be the extreme. The numbers that we're seeing here are strong enough, meaning that the uptrend and those values should hold this market as we go forward. Next, we'll cover crude oil. Crude is continuing just to stay sideways. I've talked a lot about this configuration. We have upward projections right now for 105, let me get these exact numbers, 107, 118, 126. And this is a weekly projection here. The algos are just suggesting that this 10-period moving average is going to turn up. So I'm still, as far as I'm concerned, locked into 82, 92 in a range. There's a possibility to get up to the 10-period moving average, which is basically 93, we'll call it 94, but it is declining right now about $1.50 per week, which puts us at 92. So that's going to be a pretty solid resistance. The PPM1 is at a minus 0.24, which suggests there's only about a 40% probability to rise above that number, which we're just going to call 92 for all practical purposes. And so, like I've been talking, I think we just stay sideways, 82, 92. It gets a little random. You probably sell at the upper end of this weekly range that's being projected by the market grid, and that should be where we stay. Do we get up to this level? Not from this configuration. I think there's probably at least several weeks of consolidation before we'll be in a place to see a rally above those above these moving averages, and certainly above the 40, which is right now at 98. I don't see that happening. So really sideways range. And I think a lot of these markets, just to be clear about this, a lot of these markets are just going to go in these wide band trading ranges and consolidation until we see what comes out of the Fed, see more of this fourth quarter as it unfolds. And, you know, it's kind of hard. I know if you look at the earnings today and you want to project what Amazon is telling us and what these earnings look like, that it's terrible out there, but it's really not. And from a technical standpoint, everything looks like stable is the way that we go, and not that there won't be dips and volatility. What I'm talking about is just basically a wide band of trading, and this is likely to happen in all the key markets as far as the equities and especially crude oil. We'll cover gold next, and gold is still, this is the weekly projecting that we're going to get better. It's actually trading pretty good. We're up 1280. We're at 1669. Resistance right now is 1689. We'd have to get above 1700 to do anything, but it does appear that over the next week or two that gold is going to start to set up a pattern that we are likely to move up into 1730, maybe even 1750. I think this market's fairly explosive if we just look at the coiling that it's been doing. And I've got the STX buy signal on here. We've gotten a bunch of STX buys, and last time we had 6. Actually, it's continued. This is the 9th one in this pattern. And so it really is setting up some interesting patterns. You can see where these green arrows with numbers on them have set up reasonable lows. And whether this comes out again, it looks like it will, and probably back into I'm just going to call 1725, 1750 plus over the next couple of weeks. So there is going to be a bias to the upside. Once again, we had every reason to trash this market when the dollar was strong, and that has dissipated as well. Next, we'll take a look at Bitcoin. And interesting that we continue to see Bitcoin trade pretty well here. We're at 20,253 last trade. We're challenging some of these upward moving averages. This is the weekly. It looks like we've got a shot at possibly breaking through this 21 period moving average. And if we get there, we've got some new price objectives, and they are suggesting that high target 1 is 25,776, 28,686, and 30,84. So I think most likely if we did get a rally of this sort, we'd rally back to the 200-week moving average, which right now is 25,930. So there's a lot starting to point that this market is going to turn up and see some positive tone. Shortly after that, however, it looks like there will be a rejection somewhere up here. We'll try to time that out over the next couple weeks. We'll see what happens. I'm going to go to daily here. I have to change the scale. Bear with me a second. Daily is already hitting some of these fib targets, and so it looks like we're going to settle in. The chart I was just showing you is a Sunday to Sunday chart, so we're still looking at the configuration here. We traded right into the fib target 2. So when the market was over here, the fib target, Wavetech Fibonacci projection tool was suggesting that the pattern initially was for a move to 29.58, and then there was a new projection that came in here, and that was for 21.097. We printed right to 21.012, so we came within $70 of that target that was being projected back on October 17th. So the pattern just kind of rolled up. We got this, but it does look like we're going to dissipate and potentially see the market roll back into this consolidation or the backside. And we're fairly close on a short-term basis of completing this pattern. Okay, folks, this is going to complete the show for tonight. I appreciate that everybody watching, all of you in the live room. Appreciate all of your participation and everything that goes on here on the channel. So make sure you subscribe, and make sure I'll have the link up when I go off air here, and you'll be able to get these indicators and get signed up and get into the live room next week. Should be an exciting week. Let's see, my favorite bot just showed up. Let me get rid of that. So anyway, I will complete it here. Thanks again. Like I said, this is the final video for the week. So we'll talk to you folks on Sunday night. We'll see you then.